Joel, I know that the Securities and Futures Commission and the Hong Kong Monetary Authority have proposed a new regulatory regime for over-the-counter derivative transactions in Hong Kong. What does the asset management industry have to know about these proposals?
Asset managers need to know that if their business involves derivatives and if it's connected in some way to Hong Kong, then they may well be subject to the new Hong Kong rules.
And what do these new rules provide?
The rules cover two obligations. There will be a mandatory obligation to report OTC derivatives and a mandatory obligation to report to clear OTC derivatives. And there are also proposals in relation to two new regulated activities.
So are all derivatives covered?
No, not all derivatives will be covered. The obligations only apply to certain categories of derivatives. Those will initially be interest rate swaps and non-deliverable forwards, but that list will be extended over time.
So will funds need to report OTC derivative transactions?
Possibly a fund will need to report if it's based in Hong Kong. So if a fund is domiciled in Hong Kong and is a counterparty to a transaction, then it would need to report the transaction to the extent that it exceeded a certain reporting threshold.
What is the reporting threshold?
A reporting threshold is basically a minimum level of derivatives business. So the exact level at which the trigger for reporting will be set hasn't been specified yet, but we do know that the reporting threshold will be set at fund level and on a per product class basis.
So that's reporting by the fund itself. What about the fund managers? Will they also have reporting obligations?
Yes, fund managers that are licensed by the SFC may well need to report to the extent that they originate or execute a transaction for a fund and the transaction has a Hong Kong Nexus, then that transaction will need to be reported.
What is meant by a Hong Kong Nexus?
A Hong Kong Nexus is where the derivative is linked to Hong Kong. So it's where the underlying reference value is somehow linked to Hong Kong. That could be the currency or the interest rate, or it could be that the reference entity is a Hong Kong listed company or is Hong Kong government related.
And what about overseas fund managers? Do they also have reporting obligations?
Overseas managers won't have direct reporting obligations, but the one thing to note there is that if they manage Hong Kong domiciled funds, then they may agree to report on behalf of those funds.
And what about clearing? I understand that certain over-the-counter derivative transactions will be cleared through a central counterparty which will be interposed between the trading parties. Does this mean that funds and fund managers will have to centrally clear all OTC derivatives?
No, it doesn't. The scope of the clearing obligation is actually more limited than the scope of the reporting obligation. For the clearing obligation to apply, there would need to be a Hong Kong domiciled fund, and both of the parties to the derivative transaction it's entering into would need to be above a clearing threshold. The other point to note there is that it would only apply to certain categories of derivatives, so that would again initially be interest rate swaps and non-deliverable forwards, but that list will be extended over time.
You mentioned earlier the creation of some new regulated activities. What are those activities?
There's going to be two new regulated activities, a Type 11 regulated activity, which relates to dealing in or advising in relation to OTC derivatives, and there will be a Type 12 regulated activity, which will relate to the role of clearing agents in the OTC derivatives market. The other point to note is that there will also be an extension of the existing Type 9 regulated activity, which relates to asset management. And the purpose of that extension is so that the license also covers the management of portfolio of OTC derivatives.
So what about existing fund managers who already hold a Type 9 license for asset management? Will they need to do anything from a licensing perspective?
Yes, they will, to the extent that they manage portfolios of OTC derivatives. And if that's the case, they will need to apply to the SFC for their Type 9 license to be extended so as to also cover the management of portfolios of OTC derivatives. And if they do that, then they won't need to separately apply to the SFC for Type 11 licence.
Thanks. So when will all these proposals actually be implemented?
The timing in relation to implementation hasn't yet been confirmed, and there's still some consultation papers on the way, but the broad expectation is that legislation will be in place by the end of this year.
Thank you, Joel.